And now I want to move to the next panel, which is an unusual 5-people panel around the DeFi track. So we have five amazing speakers. The first of which is Michele D'Aliessi, who's a friend of mine, and he recently launched Superfluid Finance. Michele has been working in startups for a very long time now. He authored one of the #1 article on Medium on how Ethereum works. Superfluid is building new primitives like continuous netting and real-time balances, creating the first capital-efficient gross settlement solution. His solution could save DeFi project hundreds of thousands of dollars in gas costs. Next, we have, and I'm really proud to have him on the panel, Stan Larimer, who's a prolific blogger, keynote speaker, and expert consultant on real-time industry-grade digital currencies. He's the CEO of Cryptonomics, which he co-founded with his son, Dan Larimer. Together, they also founded Bitshares, often referred as the very first decentralized exchange. Then we have Ali Raheman. He's the founder of the Autonio Foundation, which aims to build a prosperous community around algorithmic trading by democratizing access to intelligent automated trading tools and infrastructures. Then we have Matthew Finestone, who's the head of business at Loopring. Loopring is a zero-knowledge rollup protocol for scaling Ethereum, allowing for gas-free fast trading and transfers. Loopring layer 2 scales Ethereum by a factor of 1,000 without sacrificing any base layer security. Then we have Johann Eid. Johann works at Chainlink as a product manager, focused on making smart contract useful for the real-world application. The panel is going to be moderated by the great Eleonore Blanc. She's the founder of CryptoCanal, head of business development and marketing at Satoshi Angels, offering marketing and business development service. She's part of the Dutch crypto community and started a crypto experience in the wallet mining industry at btc.com. So over to you, Eleanor. Thank you so much for joining.
Hi, Marcelo. Thank you so much for putting us all here together on this panel to discuss everything about DeFi. We have a lot of different actors here, a lot of different projects, variancing with different technology. Thank you all for joining us. I'd love to hear a little bit more about all of you, basically. You're all muted. You're all saying hi, and you're all muted. You all have to unmute yourself and say hi and present yourself so that the people on YouTube and following the stream basically can have a feeling of interacting with all of us. I know that this is like your, 100th Zoom call this week probably, but let's try to make this as interactive, as nice as possible. We're already doing everything digitally and remotely, so let's bring a little bit of a humanity here as we're trying to build, the future of decentralized finance, and all of you guys are part of it. So please, I want to start with, I'll start with my favorite, or not my favorite, but I'll start with Stan Larimer. Please, you're like one of the OG here. Sorry for the others wanting to jump in. You're one of the OG platforms here. I think we have a lot to learn about Bitshares. Please introduce yourself and tell us more about you. And then I want to let people interact, and let's do this very fluidly, please.
Okay, I'll take a shot at it. Bitshares was the first full-featured DeFi decentralized exchange on a blockchain. It was developed by my son, Dan Larimer. It's been running for 6 years, since 2014, with blocks cranking out every 3 seconds, which make it probably one of the longest blockchains in the world, and much longer than Bitcoin by now, in terms of number of blocks that it's produced. It was the original offering that implemented delegated proof of stake and got rid of mining for the first time. The latest offerings in Bitshares that have just been built is a new liquidity pool system. Dan went on to develop Steemit, a social media platform, and then EOS, which some of you may have heard of. It's a smart contract platform that I think means Ethereum on steroids. Shortly after EOS launched, I created a clone of it called Bitshares EOS, or BIOS for short. And that's designed to connect Bitshares to EOS so that you can move the various tokens that are offered on it from chain to chain to chain easily, and implement a new feature called jurisdictional agility. Jurisdictional agility allows people to specify which node in which jurisdiction their transaction takes place. And so now you have control of precisely where everything happens for regulatory purposes. You don't have to worry about whether or not you're going to execute someplace where your transaction might be illegal. You can specify where that is.
Did you solve everything by just putting everything on the moon, basically? You're like, oh, let's not take care anymore about, on-Earth regulations. Let's just fire everything on a satellite, and then, we'll be off-chain or off-limits, off-grid. Is that how you...
That's really great. We have some plans to put them on cruise ships so people can execute their transactions in international waters anytime. If you notice, a cruise ship usually has a casino that shuts down when it's in port and opens up when it's in open waters to handle the regulatory problems of that. It's the same general philosophy. And yes, we have plans with a project called sovereignsky.com. You can look at that there, where we're going to launch a network of satellites and move BIOS to space. And then people can operate in an international space. So that's another exciting part of what we're doing.
You're literally taking to the moon very figuratively. Thank you for that introduction. Please, I'm inviting Matthew Finestone from Loopring to jump on and tell a bit more about Loopring as well. Thank you.
Thank you, Eleanor. I'll try to follow up from your favorite here, but we'll see. Tough act. Yeah, interesting to hear from Stan as well. So I'm with Loopring. I lead the business side of things over there. Loopring is a layer 2 scaling protocol for Ethereum, specifically the flavor of ZK rollup, so a zero knowledge rollup, which scales Ethereum in kind of the most conservative or the most coupled to Ethereum out of all the different flavors out there. So some people like to call it kind of Ethereum or layer 1.5 because we still maintain Ethereum security. We don't have to kind of sacrifice, our consensus mechanism to some side chain or some other off-chain construction. All we rely on is Ethereum and some zero knowledge cryptography, which handles the computations off-chain, but brings a succinct proof to Ethereum that says everything that happened in this world is proven by the powers of well-known math, or math that's a few decades old at this point. And here you go, Ethereum. This is the new state of the world, which must be true, but by construction. So that's what Loopring does. Specifically, we do that to scale decentralized exchanges and transfers. So we can't scale everything on Ethereum, all the arbitrary and beautiful composability smart contracts. We could only scale right now order book trading. So kind of that feeling you have when you're on Binance or Coinbase Pro or Kraken, whatever your preferred centralized exchange is for people. We replicate that experience, except knowing that we cannot do evil. No matter what, if we turn evil or turn unfortunate by having some accident or some regulator or state lean on the developers of the protocol of Loopring project, users have 100% Ethereum security guarantees at all times. So that's what we do. And we are adding what we could scale in this fashion. Now it's not just order book exchanges coming up imminently. It's currently in audits. The next protocol version supports AMM swaps, which will be the first, so we'll be able to kind of have deeper liquidity, passive liquidity provision on the ZK rollup, not just order book style, as well as payments. So I could send anybody who is on Loopring's layer 2 on the ZK rollup, I could transfer you an ERC20 or ETH instantly.
Sorry, not layer 2, layer 1.5, right? You have to be careful. You're putting yourself on a gradient here, and I'm pretty sure that Ali is going to have a couple of remarks regarding the AMM side of things. But thank you for the intro. I know that you guys are like BD experts, so once you're like launched on your pitch, you're like, you know it all. You want to tell everything, but keep some drops of knowledge for later. I think this is really interesting that we're very lucky to have all of us here. Let's try to have something where I know that we all have like really specific products that we're working on, but I'm sure that we can find an underlying red line for this conversation. So I'm going to let Ali just jump in right now and talk about the Otonio Foundation. Thank you, Matthew.
Glad to speak to you guys, Matthew, Stan again. So yeah, Autonomy Foundation, as Michele mentioned, we're building a prosperous community around algorithmic trading. We're doing that by democratizing access to intelligent automated trading tools, most specifically focusing on market making tools, because we believe liquidity is sort of the backbone of DeFi, and we're trying to facilitate that with the tools that we have. So market making is the focus of the product, and we believe these tools are essential to uphold the integrity of DeFi, essentially.
That was a short pitch. I appreciate that, Ali. I know that you wanted to say much more, but I appreciate that. All right.
Yes, if I go on, I'm not going to stop. There's plenty of others that need to chip in. So
no, this is nice. I just want to make sure that we all introduce ourselves, and then we can like casually go into these weird tangents, and we can get lost into DeFi. But first, let's get everybody's like name and voice heard. Michele, your turn.
Thanks a lot, Eleonore. Well, first of all, it's a pleasure to be here with you guys, and thanks for your pitches so far. I am with Superfluid Finance. What we are trying to do is we are trying to build, let's say, Lego money on Ethereum. So we tried really hard to get a layer one solution on Ethereum that allows you to send, for example, streams of capital, in this case, ERC20 or digital assets, in a stream without requiring gas for the stream to be ongoing. So you would actually basically start a stream or edit a stream or stop a stream with one transaction on layer one Ethereum. But then the stream will keep going endlessly until maybe you run out of capital, until you stop it. So it's fundamentally different from other systems that we've seen so far because of the mechanics that it has. And this allows for something quite remarkable. For example, you can forward a stream to someone else. So let's say, I don't know, I send Matthew, 10 DAI a month in a stream, and Matthew wants to send that to Ali. He would be able to just redirect the stream. So he might have zero balance in his account, and then 10 DAI a month would flow into Matthews from me, and then would be forwarded every second or every block into Ali. So this creates a kind of framework of smart contracts on Ethereum that can allow capital or digital assets to flow frictionless across the economy, leveraging layer one Ethereum only. So we see this as fantastic building blocks for what we call real-time finance. Which could allow amazing things like DAOs operating, millions of DAI a month without ever having a balance, because it's, incoming stream and then outgoing stream. Or we can create, DAOs that manage replenishing a pool in a DEX, for example, like Loopring or others. So we can create a bunch of new things that we have never seen before on Ethereum, and we're extremely excited to have this as an open protocol for people to build. So we created a framework which is designed for developers to go crazy with and create whatever we can't even imagine yet. And very much looking forward to what the community does with this.
Thank you. Thank you. So from what I've understood, these are not payment channels. These are,
nope.
It's different. It's not layer 2, but it's layer 1, and there's no gas. But
well, there is some gas, but not as much as if you were to do that in different ways.
All right. And thank you very much, Michele, for this introduction. And I'm going to give it to you, Johann. I think all of these guys are using smart contracts. At some point, they all have to face the real world. So what better than you to talk about yourself and Chainlink?
Sure, yeah, it's great. You just did the intro for me, so perfect. So our conception is basically that DeFi and DeFi applications, in order to live, have one part which is on-chain and another part which is off-chain, which people don't talk about much, right? Like people talk about logic, they talk about all of this stuff, but they never focus on the off-chain part that much, right? And the off-chain part is super important. Basically, the off-chain part is getting price data for assets. It's getting any type of data like technical indicators in terms of financial applications. In terms of insurance, it will be getting weather data, for instance. So we did an integration with a project that's looking to get crops insurance and using Chainlink to get weather data. So basically, the idea of Chainlink is in the same way that people shouldn't have to build a blockchain every time they want to create an application, like they shouldn't have to spin up their own blockchain every time. They can use Ethereum, they can use EOS, etc. They should be able to use a framework for oracles, which is there for them to use, right? Which is fully decentralized, which can allow them to get access to data, price data, weather data, any types of data point, right? And what we've seen with DeFi is that every application out there relies on price data. If it's, for instance, to be a kind of a lending application, they need the price of the collateral, and then they need the price of the debt of the tokens they're taking on, right? Like they need to know which price it is, because they need to basically kind of price the borrow to loan ratio. So Chainlink is currently used to secure most of DeFi applications. Around $4 billion as of today is being secured by Chainlink oracles, with Aave, with Synthetics. And yeah, go ahead.
Pause you right there. Isn't that itself a centralization if most of the DeFi industry is using Chainlink right now? Aren't you guys down?
I wouldn't really say so, because like if you rely on decentralized network, just like, you know, because all of DeFi is on Ethereum, we don't say that the DeFi is centralized because it's on Ethereum, right? So I would equate it to this. Like, I think you should look at Chainlink as a decentralized network of nodes, just like Ethereum, just like Bitcoin, just like other blockchains. I think the main trigger and the main reason people kind of confuse it is because there is this off-chain component, which the blockchain industry is not yet familiar with, but on which it depends very heavily. Most of DeFi relies on off-chain data. Without off-chain data, you couldn't get any of the stuff we see today with Aave, with Synthetics. Like, how are you going to tokenize gold on Ethereum if there is no price feed, right? So yeah, that's really what we work on, and what we hope to provide to the industry, a safe way for people to access data points, which allows them to build cool stuff.
Great pitch. Now we only need one chain link with decentralized oracles, making sure that all of us have, basically you guys are taking care of like what no one wants to take care of, which is like dealing with the real world. I think we all like to be dreamers. We all like to, looking at you, Stan, going to the moon, literally. And then others have to like go and find indexes of price indexes and weather data, and making sure that all of these things, you know, cross each other, right? And that you have the right information out there. Otherwise, all these smart contracts are going to start doing really funky things, and that's not something we want. Can you maybe tell us a little bit more about Loopring here? Because I hear a lot about, recently we saw that Ethereum was going through really exciting developments, right? This is like an underlying protocol that most of DeFi is relying on, as you just said, Johann. Layer 2, is that still something we need in a world where Ethereum might be able to scale on its own on layer 1?
Right, good question. And I promise I'll be quick this time. You won't.
No, it's a good one. No, you can. I'll let you dig I want to hear the full answer about.
Sure. Yeah, I'll even. It's bigger than Loopring. Loopring is but one solution, honestly. Layer 2 is becoming its own thriving environment. Our peers or competitors, however, are unbelievable. So we're in. We can't, sleep a minute, right? It's the same. It's the new race that I like to think of, this new battlefield of scaling, right? There's been a lot of attempted Ethereum killers or replacers who, in my opinion, make a meaningful sacrifice in the trade-off space. Usually that means less nodes, secure, a lesser degree of decentralization, censorship resistance. I'll push back slightly, respectfully on Stan's comment about EOS being Ethereum on steroids. I mean, maybe if you want to say that, you have to have the caveat that it has the downsides of the steroids as well. Whatever. I'm not a pro on this, but it has
about the cartelization of drugs. Is that where you're going, Matthew?
Sure. Whatever downsides there are, right? So the other there might be experiments or room for alternate L1s to continue to try to build an ecosystem that's good for everybody. But the fact remains that Ethereum is the dominant smart contract platform. And it does this, what makes it so attractive, besides its developer community that just, keeps on snowballing and the network effects are in place, what got them there is this like credible neutrality, right? A lot of nodes, not only 21 or whatever kind of scheme you could think of. So I think that's what we really value. And all the layer 2 projects, or like a big subset of them, are really intent on, keeping the Ethereum guarantees that we're all here for. The ones that, we cannot breach, the censorship resistance, the complete credible neutrality is my favorite way to phrase it. And then give it another environment, because it's so popular. Ethereum is right now congested, or it's okay these days, but a few months ago, it's congested because it's so popular. Some people say, oh, look at this, Ethereum fees are brutal. This is what a failure. I really think it's the opposite, right? It's what a success that somebody is paying $112 to get their transaction in the next block is a great success. It's a bit unfortunate that a whole bunch of the market is being priced out. And that's really sad because we have bigger philosophical ambitions to, bank everybody and the bigger ideals, not just the degen finance. But, the popularity and the high fees are a direct mathematical expression of how popular, how valuable that block space is. So layer twos just try to take that economic activity, put it elsewhere, compress it, and then put it into that valuable Ethereum block space. So I'll leave it there. That's a bit broad, but that's where Loopring concerns itself.
Well, I'm happy that someone is taking care of this. And you're right, like right now, very useful, right? Right now, today, congested network, makes sense to have layer two, solutions enabling people to be able to compress stuff off chain, come back on chain, and to still have Ethereum maybe in a cheap way, but by using Loopring to have that full accessibility today, even though Ethereum is congested, right? I guess it's the question is more like in the long term, because we all want to see Ethereum grow. We all want to see Ethereum scale. So then we'll see how, if Ethereum killer is its own killer, you know what I mean? Like if they come through and if they are managed to deliver everything they're to deliver, if they're able to be the electronic cash system that we want to see, then it will make other projects less relevant or less appealing if now there's a reason to have to like find other solutions around Ethereum. But if at some point it's cheaper to just stay on chain, then people might just do that. I think this leads us to like an interesting part where we just saw that SingularityNET launched their own DAO, right? They're also going through their own progression. They're also evolving. They're also trying to address new things. I think this one goes for you, Stan, at least the first batch of answers, because you were the first decentralized exchange out there in 2013. You've also gone through other things, which like EOS, and I've met a blog producer here in the Netherlands, and they were so sad. They were so sad to get, kicked out of the DPoS system by a large exchange and stuff like that, where they were like really hardcore EOS believers. Can you tell us maybe of your experience for running a DAO so early in those days? And when you see it today happening in all these different projects that are trying to rethink their governance, you obviously have that experience. Please tell us more about the governance through the projects you've been part of.
Well, certainly governance has been a challenge because we've got so many people with different ideas of how they want to see things going. And we've just had the Chinese break off a clone of Bitshares and start it themselves because we couldn't agree on how they were influencing our smart tokens, the bit assets that we have, which are designed to give you stable coins. And so they started, according to some of the people who are members of Bitshares, they started cheating by changing the changing how the price feeds were issued. And so they went off and did their own thing. And now we've got two versions of Bitshares running and competing against each other. So that's an example, but Bitshares still continues to plug away. And we've had, I think one of the neat things about it is that people can build multiple exchanges and share the same order books among multiple exchanges. So that we've had multiple people build their own exchanges on top of Bitshares and yet benefit from putting their own transactions on the same set of order books. And so that was another
must be fascinating to be part of, actually, that to be able to see basically your own decentralized community split through a cultural split. If you're really specifying that this is a Chinese split, being myself part of the Bitcoin Cash community mostly, I can only say that forking is freedom. So it's really interesting, I think, in your case, to be able to see Bitshares, I don't know, you're not losing your community in a way. It's actually just evolving in two different paths. So you are seeing positives. You're having a positive outlook about actually this community split, right? Am I understanding right?
Yeah, I mean, I think it can be good because, obviously, people have started splitting off into two different communities, but that's okay. I still think that each community is being true to its own first principles.
Yeah, it's something. I was, again, the other day we were talking about tribalism and how communities are formed or how they die, what keeps them together. And obviously this community or your community had a strong enough reason, had strong enough incentives to actually go through the hassle of forking, of doing their own thing, and I guess if they had strong enough values to keep them together, it was worth it.
Yeah, and then on top of everything, with our BIOS connectivity to the EOS infrastructure, right. We've now got a way for any of the assets we create on Bitshares to be propagated into those other communities. So now we're tying together multiple blockchains, which have enormous processing power. So while Ethereum may be the gold standard in terms of where everybody likes to be, it's not affordable anymore. And with EOS and BIOS providing extra bandwidth to the Bitshares network, we've got a lot of future growth. And with BIOS, of course, those tokens are very cheap, and so you can operate your projects that were maybe developed for the EOS system over on BIOS and run them for nearly free. So that's how we see scaling, is cross-chain integration.
Interesting. Yeah, I think today's first chunk of the event, most of the people that were following the event in the beginning were focused on governance, right? The first part was discussing politics and the role of all of these we're like on the finance block here, but we are also discussing politics at the same time, right? We're also discussing the future of governance in DeFi, what type of liquidity as well we're going to see happening, which type of market making. And Ali, I think you're guessing that I'm leading this one to you now, because obviously I was reading a little bit more about your project, and obviously this idea of liquidity, and if it's only the big whales that are making the liquidity, then are we not reproducing in a certain way in the DeFi world the flaws of the CeFi world? So I think you have
right. So first of all, liquidity pools and AMMs are a major step in the growth of this ecosystem. The popularity of AMMs and the swift adoption that we've seen is a note of the potential DeFi really carries. Uniswap doing more volume than Coinbase, over a span of few months. It's amazing the growth that we've witnessed. But they're a good first step, and then they have their own limitations when it comes to AMM specifically. There's losses due to arbitrage. There's impermanent losses, which is just a fancy way of saying doing bad trades, because it's an AMM and it's a very simplistic approach towards market making.
You think that AI will be able to do better trades, right?
Absolutely, yeah. That's what I think would happen, and that's one of the things that I'm very excited about, and working with SingularityNET on that front. So yeah, when it comes to liquidity and centralized exchanges or CeFi and DeFi, what's essentially changed right now is the source of the liquidity is still huge whales, and what really has changed if instead of banks or centralized exchanges having huge chunks of the liquidity, and now it's being managed by a bunch of whales. So it just doesn't fit well with the ethos of decentralization, in my opinion. So
but I know that I remember that meme where it was like decentralize everything, and there was like every aspect we wanted to decentralize. Everything had to be absolutely 100% decentralized. Is market making and liquidity really is that really also where we have to go?
Right. I mean, liquidity, I think, is definitely the backbone of DeFi, because any token project that you consider, liquidity is essential for its growth or adoption in different kind of ways. So liquidity is essential and very crucial and critical towards the growth of any kind of this ecosystem. And the source of that liquidity, I believe, is crucial as well. And that's why I think that so even when it comes to AMMs, it came from the idea of liquidity mining that I believe Hummingbot came up with for the first time. And so liquidity mining is this idea that you provide liquidity in the form by making markets, for instance, putting buy orders and sell orders in an order book, and you start earning a certain amount of reward for providing this liquidity for risking your capital in that. And that's how the idea of liquidity mining came up. And then things just blew up with AMMs and farming tokens, and you see these food coins, sushi, and a billion other ones. And so things really picked up, but they've died down now because they're not sustainable. There's impermanent losses, and AI definitely, I think, would play an important role in making these market makers more intelligent. And I think that there are other approaches that can be taken that really maintain the integrity of a decentralized solution and promote this ecosystem in a more sustainable way forward.
Hopefully. What if the AI, we don't know, right? That's like the big, the what if question. And we see it like, I think it's really interesting that in DeFi, we're trying to experiment, and we see other centralized platforms that are not doing so well. And I don't know if any of you were using Cred by any chance, like if any of you was using a centralized solution to stake and earn. I hope everybody is safe. But I think everybody's okay. No one's like suddenly like tearing up. So I'm just wondering, like with all these new possibilities that we're seeing with DeFi, and all of you guys are like working on specific parts of this ecosystem, right? Are we really solving the problems that we had with centralized exchanges or centralized platforms? Can we really approach DeFi and actually make it sustainable, and actually from liquidity to other protocols maybe out there to ensure a better building blocks for Ethereum, on Ethereum, right? Michele, maybe.
Right, I mean, for sure. One of the first things that the centralized exchanges don't have, if you don't own your private key, you don't have your assets. So, I mean, one of the most important things with DeFi is actual financial independence. Now, it's a different story that what protocols are you using, the certain issues that can happen with protocols, and then like we saw back in 2017, different ICOs popping up, and many of them are scams, and that's what we've seen with DeFi as well. There's rug pulls that happen. That a new token comes up on Uniswap, you add liquidity to it, people hype it up, and then
maybe
$50 million.
The AI is going to jump on that because it's going to be like, oh, it's wonderful, like so much volume, so much interest, all that community or Twitter feed. Maybe that AI would pick on that and jump on it. So,
well, I believe more in the benevolence of AI, and I think the AI working against us in a more AGI perspective, that's a bit down the line. When it comes to specific to finance, we're talking about using reinforcement learning and machine learning agents to really predict which has been being done by hedge funds and other trading institutions for a long time, but the average user has never had access to these tools. So the idea is that you make these.
What about value investing? What about investing in the best projects and not in the pump and dumps and the altcoins? What about long-term investments? Isn't that also like a different way to investing that would give a more rational market? I think when we're depending on AI and when we're depending on these trading bots, there's no human behind it, right? They invest in what looks and number-wise might look good one day, but value-wise or use case-wise makes no sense.
No, the way that I see it, the AI is I mean, especially in our case, use of AI is really enhance your performance. So I could be a market maker right now. I could be market making on Loopring, for instance, and I could be earning a passive reward for providing liquidity on that exchange. And with AI, that performance could be much better than if it was just me using my bot, using Hummingbot or using Antonio's bot and running a market maker on that. So that's where I think AI is definitely going to help everybody give them the competitive edge, compete with others, provide better liquidity, be a better source of liquidity, and all in all, contribute to the health of DeFi.
Hopefully. I also want the health of DeFi.
I mean, we have seen like DeFi. I remember watching, DeFi polls in June, and I was extremely excited that DeFi reached $1 billion in total locked value, even though at the beginning of the year was around 600 million. And then, now as November is like, 4 months later, we are at $12 billion in total locked value. And what I feel like is, I was in startups since, 2010, 2011. And I'd never seen a market growing that fast. And what's funny is that, we have seen mostly a repetition of CeFi in DeFi. So, what are we building? We're building exchanges. We are building, most of the things we are seeing now is about peer-to-peer lending, are those kind of things that we have seen before. There's very little that is fundamentally new, that is shaking up the financial system on the roots up. And, we are seeing, I think, now a set of enablers that are going to get there. So now we have, market makers, we have liquidity. This actually happened with Ethereum in the current gas situation when, Uniswap did their airdrop. The gas prices was absolutely unmanageable. And now is either going to be Ethereum scaling or, Loopring or other L2s or side chains, and we will see that scalability. So a lot of friction is going to be removed. And I can't imagine what, new things are going to spark. So to give you an idea, like what we were thinking about is, okay, so why are we in a digital economy where everything seems to be going down the direction of like subscription-based services? Like, you even get your grocery delivered to your house on a weekly basis now as a service. Everything is becoming as a service. Even, Chainlink is a service. Like everything is a service. And why are we... So yeah, why are we paying these services on discrete transaction on a monthly basis? Like, what's the point there? And why are we not paying, for example, a stream of data with a stream of capital or a stream of tokens? And, maybe in DeFi, we have seen NFTs that are attached to some other, logic that actually transform some of the elements of our financial system. But what if we could say, okay, I'm not a customer of Chainlink, right? I become a customer of Chainlink, and then I create a relationship with them. And then I already start paying them as an ongoing relationship. And then I stop being a customer and they stop paying at the same time. They don't have to wait at the end of the month if they actually will receive my payment because it's processed by a credit card and maybe it's actually not covered. And so it's not going to go through. So we're trying to see, okay, what is DeFi going to do next? We have seen a lot of amazing innovation there, but what's next? Like, I can't imagine we will restrict ourselves in, the current financial system. I don't see, kind of self-managed, self-executing contracts on whatever layer one to be bound by the current rules of the financial system. So what's next? That's kind of my biggest question. And so that's why we've been focusing on building blocks and just software that allows anyone on earth, being open source, to try those new things, see what we can do, build a system that gets paid or gets a token or gets an NFT or gets some logic and triggers a cascade of effects so that you can, have a DAO which automatically directs 30% of these proceeds into an investment pool, or, just providing, maybe automatically provides liquidity to Uniswap and then grows that capital in a better rate than a bank would normally do for a business outside of DeFi. And this is, I think, is the next step. Imagine, business-focused wallets that can provide automated accounting, automated invoicing, automated savings, automated investments. And then we have Singularity Network that plugs in and redirects those stream of those programmable cash flows, let's say, into whatever is the most appealing to that specific project. And then we will see probably a whole new layer of innovation on top of DeFi, which we are extremely excited to look for. So imagine, when all those things come together, what can we actually build? That's the question.
I think part of this was aimed at you, and I think part of this statement was quite interesting in discussing like programmable cash flow, basically. And if I was just a Chainlink user, I I kind of stream my bike here. I'm in Amsterdam, but I actually pay a subscription to my bike. I know that sounds like ridiculous right now because you're thinking, why doesn't she buy a bike? Why doesn't she just, because they get stolen all the time. It's really expensive to get them fixed. So therefore, I'm like, I have the luxury to have a subscription fee to a bike service, which comes in, if I need anything, they come in and fix it basically. So what if, and that's just a bike service, but what if that was the case for Chainlink by example? And I think that's a quite interesting step. Could that be the next step for DeFi, this sort of really just manage everything automated in our life from my bike service to everything basically, and then hoping that my company in the background is also making money because they're also using AI and market making portfolio, using the Singularity DAO. No, I'm kidding. That could be like the whole circle.
Yes, that makes sense. So I think what's quite appealing right now, I mean, for Chainlink, like you can't just go to Chainlink and get a subscription because obviously it's a decentralized network, right? So what happens with Chainlink and what you've been working on is a way to get what we call, well, everyone knows SLAs, right? Whenever you enter into an agreement with a data provider, you have an SLA. He's going to be providing you this data at this granularity, and he'll provide it, it will refresh every 1 minute. And if he doesn't provide it well, then there is some kind of repercussion, right? That's an option agreement. So the repercussion can be, monetary, they can be kind of judicial, like it differs. With Chainlink, what you're planning to do as far as subscription models is for people to be able to enter into SLAs with node operators, and the SLA would be fully recorded on-chain, where basically a node operator would commit to providing you any type of data at any frequency you need. And you would commit in turn to paying him an amount, every time. Like it can be weekly, it can be monthly, it would be some kind of subscription there, right? And the true value here, and what I find really appealing, is that this commitment would be fully on-chain, and every result and every data point that's committed by the node operator, by the Chainlink node operator to you, could be tracked on-chain as well, right? So you have the possibility to see that the subscription was respected, that the data came in as it should, and you have all the proof on-chain. You have the commitment, you have the data, you can track the data and compare it to the commitment. Was it on or was it not? Like did the data arrive at the point I was expecting it to arrive? And what I find extremely appealing right now is that we're seeing more and more data points being used on-chain, right? And the more data points are being used means the more compelling applications are being constructed, are being built. So, we started really with price feeds on-chain. Like we put price feeds, and people like Aave, people like Synthetics started using them to collateralize assets, to create synthetic assets, to kind of secure liquidations. Like basically, if something is under collateralized, you can see it on the price feed, and then people can liquidate. So that's extremely cool, right? But I feel like with the area we're entering more and more is this area where the data is getting more and more diversified. What I mean by this, we recently started working with an insurance company, which is using, which I briefly introduced in my at first, but basically they're using our weather data from satellite providers and multiple different sources, and this weather data can trigger crop insurance contracts in remote places, like in places where they don't have access to kind of weather insurance, where they don't have access to this kind of stuff because the infrastructure is not there, right? I mean, Venezuela and the US are very, very different in many ways. And one of the biggest ways is the population that's unbanked not only doesn't have a bank, but they don't have any insurance. They're missing a lot of stuff, which we take for granted, but we don't exist in these countries. So what I find appealing is the ability for anyone to create any type of application by entering into an agreement with Chainlink node operators into a subscription model, where basically node operators can provide any type of data, and this data can be recorded fully on-chain, and everything can be proved on-chain, right? It's a definitive kind of source of truth. And there, what you can create is, like the possibilities are limitless, like global trade, supply chain, like being able to track food delivery from one place to the other and trigger contracts based on the kind of Oracle data delivery. So yeah, I think that's the next phase of DeFi. We started with really the basis, lending, borrowing, synthetic assets, derivatives. but what we're going to get into is some stuff which, doesn't sound very DeFi at first. Like we're more, sorry, my earphones ran out. Yeah, we're more used to kind of the, like the food tokens and this kind of type of stuff. But obviously there is something behind this, and what's coming, I think, is global trades on blockchain, like supply chain and all of this exciting stuff, which requires a lot of data and a lot of different subscription models. Yeah.
Thank you, Johann. And I think definitely we're going to see, like, again, this space goes so fast, right? Like the innovation is just like, it's so hard to keep track of this industry, basically. It's just, as you were just mentioning before, from a couple million locked into 12 billion. Like, I also feel like it's also could also, collapse, guys. We're aware of that, right? It's like, it seems like so much. It feels like a boom and bust cycle as well. And we can see it, as you were saying, like how, boring lending, it just, maybe it's already onto the next thing. But I think a lot of what people are looking at is like, is DeFi really answering the problems that we were having with centralized finance, basically? Are we really tackling, the hard problems, the ugly problems? Is really decentralized finance really fulfilling the vision, basically, that Satoshi had, right? Of peer-to-peer electronic cash systems, okay, Bitcoin Cash and more. And I really want to hope that all of these services, all of these different platforms are actually thinking of that before even jumping into the next hype. We have now 12 billion locked in smart contracts. That's insane. And I just want to make sure that this is not just going to collapse and that a lot of people are not going to get hurt in this new economy that we're building, right?
I mean, you can sense a little bit of an ICO feel in that as well, because I mean, if you can hyper collateralize and you can take out, you put in ETH, lock it up, you get out DAI, you put the DAI somewhere that's going to provide you some kind of return, and then you keep the circle spinning as much as you can. You hyperinflate the whole thing, and it can come down as a castle of cards. But in there is definitely innovation. So it might contract again, and we think probably will feel that it might do a little bit. But the creation of new items and new innovation is already there, and it's not going to go away as it didn't go away after the ICO boom and bust. So yeah, I'm sure DeFi will pave the way for new innovation, even if it does contract again. What's incredible is the rate of this innovation. Like the point is that pre-internet, the world was not connected. So like innovation could not travel fast enough because people couldn't connect one another. And now, funny enough, due to the lockdown situation we're in, we are all sitting in our homes, but we are always connected to everyone else on the planet. And this is just one Zoom room of many we go through during the day. And everyone has access to these tools. It's like a Linux level of access. It is open source, right? So you get a ton of very smart people or very bored people that are also smart because they see problems around to build stuff that is freely available to everyone else on the planet and create together in an interconnected world. So now that internet is there and we have another internet, bubble in a way, there is a ton of innovation that we wouldn't expect that is already there. And, I'm super confident this is going to last.
That was a very
in the long run.
No, I think I follow your sentiment as well. Like in the big boom, something good must come out of it. Hopefully, like statistically, something good is bound to, like, out of all this innovation and all this, we're bombarded by information. And like you said, like this is only one Zoom, part of many that we're part in every day, and we're just lucky to be part of all of this. And I think these panels are important to sort of, for people that you guys are all working on this like daily, right? But for people that are just coming in and they want to make sure that all these promises, all this beautiful, unicorns and rainbows and the future is decentralized, finance is decentralized, is everything on track, basically? Because we see it time and time again, projects over promise, they fail, some mismanagement of funds happen. It's really interesting but we're all trying to learn from each other, right? Hopefully we're all figuring out what the best governance is. And when we can learn from Bitshares, Steemit, EOS, everything you're part of, Stan, as well. Like these are all examples and projects that we've been following because you were the early adopters, right?
Yes, indeed.
And today, it feels like today, like, do you feel like you were talking before about those nodes that are now launched in space? It just, part of me feels like, is that really where we should be going? Do you really think that that's the evolution of the space?
Well, one of the things that we've always had was a very strong independent streak, wanting to be free of the global financial system as it's currently constructed, to build something that's an alternative to it. And of course, that gives you regulatory constraints that, if you want to be able to control with whatever company, with whatever project you're building, if you want to control where in the world your transactions take place, or out of this world in this case, then I think that can be a definite plus. Now, we're at the same time offering a number of new projects that are SEC-approved securities offered on the blockchain. So just to give you some examples, we're going to be launching a new exchange to compete with the big boys called the HyperDex, which will be built on top of Bitshares, EOS, and BIOS, but will give people on-ramps from the current fiat system. Another thing is Mission Space.1, which is a project to launch 4 space telescopes. Those are 30-inch telescopes, about 1/3 the diameter of the Hubble, but they're available to allow ordinary people on the Earth to take control of the telescope for little periods of time and take their own pictures of whatever they want to look at.
You sound so prolific. It seems like you guys are just launching so many different projects. Either it's a good thing or it's like you just have too many ideas and you have way too many hands to implement all of this. But I just see that there's a really interesting that came in the chat. And I kind of, that's an interesting aspect. What are some of the biggest developer problems DeFi has solved and how has it empowered them? Can developers be the next bankers? I feel like there's something there that all of you, again, have built or have mentioned or touched upon, is these power of these platforms and the power of developers, right? These developers are rising and code is law, right? In our space, at least. And what do you guys think about this? What do you think about this question?
I'll be brief on this. Go for it, Matthew.
Oh, no, go ahead. Well, I just wanted to say something about the previous point, and then
yeah, go ahead.
Like DeFi, which has become a hot label and now like a marketing term to pump coins, or that's a cynic view. There's nothing like, I don't think there's nothing virtuous in itself about DeFi. Like, not everybody should be like, oh, DeFi is so, every DeFi project is so great. Like, if a normal friend of mine that was not interested in crypto wanted to start a centralized financial company, like an app that's connected to their bank, and it was very, and it solved problems for users, I would be very gung-ho about that. DeFi and permissionlessness and all these fancy words that we're all so accustomed to, it's only cool if it allows something that like a user values, right? And we've learned this like the hard way. Like, Loopring's been around for 3.5 years. I've been saying for all those years, hey, don't trust Binance, don't trust anybody, use us. Like, and now we're actually coming close to approximating that performance where you feel like you're on a centralized machine, low latency, gas is abstracted, but still you can't like implore people, hey, you should control your own keys, use this, right? If they want to trust Binance.com because they trust the reputation, or could they trust CZ behind it, or they trust the regulatory regime behind it, that's perfectly fine. DeFi is only really accelerating because there's these wild things that it's allowing for the first time, which some people really value. Those people are mostly big whales. We're not saving the world. They're allowing whales to lever and relever and make big money. But it often starts like this. It's speculative. It looks like a toy. It's dangerous. But this kind of like finances things, and then more honestly like noble sounding things like Michele's project, which I had just learned about, and Ali's as well, right? These are kind of may I say like newer or like smaller projects. They're not what, but one of these might become a huge thing that all the speculation before it, kind of laid the groundwork for. But yeah, basically, there's nothing. Finally, like the market will weigh what is valuable. Just slapping DeFi and saying DeFi or saying, hey, this is a super fast alternate. Again, back to like an alternate L1 or whatever, or even Bitcoin versus Bitcoin Cash. I don't want to get into this debate, but the market, all that matters is the market. Like it's the best tool we have. It's not purely rational. Surely the crypto market is insanely irrational, but it's getting more and more rational, right? Things are floating, things are moving. In the long run, it is the best tool we have to say this is valuable or this is not. And that's what's happening with DeFi projects. Just stamping a label on it, it doesn't solve everything. Only if it really, it's the best tool we have, the market, and a consumer saying, I use this, not because I was implored to, because DeFi is better than CeFi. Often it's worse, but often it's better. If you go to Uniswap and one click and you don't need to KY, it's solving a problem. So that's what I think DeFi is. It's solving problems for certain people that have properties that may be valuable elsewhere. But yeah, there's nothing it's not some magic fix all. And yeah, anyway, I'll leave it there for now.
That was a good tangent. I love the passion. Like really, I think, and something you just touched, I'm not even going to acknowledge the market difference between BTC and BCH because that's irrelevant right now. But I think what's interesting, you just touched upon it at the end. You're talking about the permissionless of DeFi, right? The sort of, there's no KYC, right? A lot of people are just looking at this like, oh my God, like you can just jump in this privacy galore and it works. These platforms right now, you have liquidity, it's out there, but you can also lose everything, right? So I think, and you're the only one here with like zero knowledge proof rollups, right? So maybe you want to touch a little bit more on like, I think we're actually running almost out of time soon, but like just one bit about privacy, I think, and the permissionlessness aspect of DeFi, which is, I think is, I wouldn't say all the way sacred, but very important in this space when we're talking about censorship resistance and making sure that, maybe we shouldn't make sure that everything is SEC proof, but maybe that's just, maybe as a moderator, I'm talking too much.
Right. I don't want to take up too much time. I want to hand it over to Michele, who I think had a good point on developers. But yeah, zero knowledge is like, here's a little bit of a tangent. Loopring does not employ zero knowledge proofs for privacy preservation. We do it for scaling. So zero knowledge proof basically takes something and give you like an output that said, this is what happened here, but you don't need to know all that. We use that for compression of a lot of things into one thing, whereas something like Zcash uses it for like obfuscation of certain things. So right now it's kind of like an either or, privacy or scaling, but the cryptography is getting to the point, honestly, as we speak, where it's going to be scaling and privacy, basically off-chain verifiable computation put on chain. Zero knowledge proofs are like a radical booster for blockchain like for Ethereum in our case, and it changes the curve. Like zero knowledge proofs really are a big thing. But I do agree with you, privacy, all that. A lot of DeFi is simply regulatory arbitrage. It's that simple. It's not as cool and noble. It's regulatory arbitrage. You could do this here because you can't do it there under the traditional financial system. But yeah, I'll leave that there. I defer to Michele now.
I'll be very brief because I know we are running out of time. But I think the question was touching on something fundamental, which is, what does DeFi give to developers and what does indeed give out to everyone out there? And I think that something is extremely powerful in DeFi, which is, you have all the downsides of being your own bank, of being in a regulatory framework, which you don't understand because it's not been chartered yet. So, there is upside and downside of that clearly. And I don't think it's going to be replacing the financial system. It's going to be complementing the existing financial system. I don't think it's going to subvert it or something crazy like that. But for developers, what's interesting about DeFi, I think, is that, I don't know if you know Patreon, but I think DeFi will do to the average contributor, being a developer or any other contributor to DeFi, what Patreon has done to content creators. We can create incentive SaaS structures and tokenized structures for everyone who has a value to add to be compensated, even in an environment where things are for free, like code is open source. So imagine like a swarm of donors that are streaming or even just sending 50 cents per month to a developer because they used our code once. And suddenly that developer would get a straight income stream that would allow that developer to free up himself from what he has to do to pay bills, to care about the family, and can actually focus on what he's good at. And that will shift everyone slowly out of this situation where they have to work on something and they can focus on what they want to build or what they're good at. And I think it's going to transition a lot of people in this industry closer to what the Japanese call ikigai, where you can actually build what you love, do what you're good at, be paid for, and still contribute to society fundamentally. So I think DeFi is one of those wheels that will get developers close and closer to get what they are good at doing. Do you want to audit contracts? Do you want to build hardware? Do you want to build software? And it's already there. We have seen a lot of the movement already going into contractor developers. They can take your time. They can decide which projects they want. They are in the luxurious position of deciding which projects they want to work on, because there's so much to build in DeFi that even prices have gone through the roof. So I think DeFi to developers, but also to everyone else involved, can unlock that slowly and steadily on top of our current environment. So I think it's crazy that we can actually do that. And I think our generation, and the younger generations are looking at this very closely because they value flexibility and their time a lot more than we used to. So if DeFi can be, side income stream, $500 a month, it's going to pay my bills. That's good. And then we add on that. Then some of that get invested. You start investing immediately as you're 20 instead of waiting for when you're 40 to start investing. And then you learn the magic of what AMM is, or even exchanges like Loopring or Uni. And then you just, build that embedded into your lifestyle. You'll probably be a bit more satisfied than we have been in the past.
Yeah, that's a very interesting point that you're bringing in, between basically bringing more freedom to open source development with people.
Absolutely.
And
yeah, that's amazing.
Content,
self-sustaining open source development. That's all we dream about.
Yeah. And for people to be rewarded for their work, and to have platforms basically which what all of you guys are building that enables this, empowers developers, enables these dreamers, these creators to build beautiful projects for tomorrow. It's very bullish and very happy feelings right now around DeFi, and we've also shown the red flags and the downfalls as well as DeFi. I will just invite all of you to have closing remarks for this. We're closing almost our panel, so please, closing remarks for each of you.
I feel like I've done mine already, so I'll shut up.
You did it.
Yeah, sure, I can go. So yeah, I think we're at a kind of extremely important moment, right? Because we've seen DeFi rise very quickly. We've seen the whole space grow. And I think Mathieu has a point. I actually got scared saying DeFi because there was so much stuff coming up and, claiming DeFi. And then you see the admin keys, a lot of stuff is off-chain. I think everyone has a different definition of DeFi. I just use it for a kind of simplicity sake, but yeah, it's very gradual. So yeah, we're at a very kind of important time, I think, because, DeFi has really shown a value prop for blockchain technology. We had one value prop, which was for sure with Bitcoin as a currency, right? That's something which, is still to prove, is still to kind of jig, but we see with people with companies like Square, with companies like MicroStrategy putting a bunch of their money into Bitcoin. That's already a huge step, which I think 10 years ago, no one could have predicted, right? And the second category of progress, which people were speculating about, but which we never really saw, huge adoption on, was really smart contracts, and seeing how smart contracts could solve something which people in their daily lives would care about, right? And that's kind of what happened with DeFi recently, right? Where, the value spiked from, you guys are talking about a few hundred millions, but I remember a year ago, it was maybe 20, 30 millions. It was nothing. You have 5-6 applications on DeFi Pulse, and that's it. And it didn't move. The value was always the same every day. It was like this. So what's great is that we saw this value rise. And what we saw is it was actually that the value prop of smart contracts was a value prop that had, that had interest, that people wanted to use. And when you've been in this space for so long, it could kind of look like a desert, right? And DeFi was our oasis. It was basically something which people were using. It was something where people, kind of saw interest, and which grew exponentially, And I think that's actually coming at a very good time, because we see the traditional financial system and we see, what's happening there. I think maybe 20% of the dollar in circulation was printed this year, which is a big number. So I do really believe that DeFi is coming up at a time when we need it the most, just like Bitcoin came at a time when we didn't need it the most, right? In 2008, after the crisis. So yeah, all of this stuff seems to always happen at the perfect timings. I don't know if it's, kind of the irony of everything, but yeah, I do think what's happening here is extremely important, and that is going to help a lot of people in times where probably a traditional system has failed them and where they'll need an option to kind of, have a good life, basically. So, yeah.
Thank you, Johann. Ali, any closing remarks?
Yes. So I guess the last thing that I'd like to say, I picked up some of the things from the discussion that we had earlier, that what if DeFi, the boom that we have right now, it vanished away, or it evaporates into some sort of crisis. We've seen things like that happen. That just gets me back to the single point. I'm obviously biased, and I'm considering that this, I think, is the most important thing that we all should be focusing on. Is that liquidity is truly when liquidity is truly crowdsourced from a diverse audience whose behavior and interests are uncorrelated. Liquidity is fundamentally more robust. It is less likely to evaporate in a crisis and more indicative of a healthy market. There's about $1 billion, more than $1 billion being spent on a yearly basis by exchanges and token projects in the form of rebates, in the form of market making incentives and payments. So liquidity is definitely the backbone of DeFi. It really marks how this is going to proceed, and that the incentives are there. The tools are not there. The tools for people to really provide liquidity and market make in a way that is sustainable, that leads to generation of relatively more stable sources of revenue, and in the process providing a valuable service to all market participants, which is exchanges, token projects, which need liquidity. So I think that this is probably one of the most important shifts that we will see. AMMs, they've done an excellent job. Liquidity pools, they've done a pretty solid job, and they're the first iteration, the first generation of how this is. And I feel like the direction that we're going to head in is services that really improve the sources of liquidity, and how those payments are made. I definitely like the idea Michele shared of streams and payments, and I feel like there's definitely different ways to really go about that. But yeah, that's what I think DeFi is headed in. That's one of the things that we'll see being the highlights.
Thank you, Ali. Thank you.
I'll leave the last word for Stan. I'll just jump in very quickly. I agree with what these three gentlemen said right before me. I don't think we haven't seen anything yet. We all know that this is like months old. It's just crazy, right? It's beyond words. The pace of innovation here. That's what's so exciting, and then how it could play together. When you just think about it, it's just I come from a centralized finance world. I used to be in like the bond business, and just that's like a very archaic centralized part of finance. And like I just know, right? Like if I'm wrong that Ethereum-based finance or decentralized finance in general cannot like fundamentally change the old world, and I'll question everything I know, because it's just so right. It's just how could this not be world changing? And yeah, so it's not too late. It's everybody is thinking of great products right now, and I'm really, especially in the sense of Ethereum, the ETH2 upgrade coming, plus all the layer 2s. I just don't think we've seen anything yet. If we're here speaking again next year, we'll be talking about a lot of different components than right now. But yeah, I'm very excited, and thanks for having me.
Thank you, Matthew. Stan?
Yeah, I guess at this point, at the risk of blowing your mind by talking about too many projects, there are three more that I want to at least mention, because they're built on top of the Bitshares EOS blockchain. One is Quintric, which is our gold-backed legal tender stablecoin. And so I think that's pretty cool. It's all stored in a vault in Salt Lake City. Ubiquitous is a blockchain that will hold 3D printing intellectual property. And RUON.ai is a blockchain-based social media application for ending world poverty. So those are just 3 more things that we've got going in our ecosystem.
Thank you, Stan, for the last projects. Indeed, you have a lot. I just want to say thank you to all of you for joining this panel. Thank you, Stan, Matthew, Ali, Johann, Michele. Really, this was like quite exceptional. I thank you to the SingularityNET people, the Cardano Foundation. Let's see how their DAO works. Let's wish them all the best. I'll close this by saying that buying a coin is a political statement, and I look forward to seeing what DeFi has to offer. Thank you, everyone.